Hey, Dan Passarelli here. Well, there's been some chatter about Apple hitting the $3 trillion mark. Holy moly. And wow, that's kind of a big deal. And a lot of times, or at least times in the past, when there's chatter about companies first doing that, they follow through a lot, you know? And boy, we've certainly seen a lot of follow through in Apple all the way since about the beginning of the year. Take a look at this 1 year chart of Apple. And yeah, literally from just about exactly the beginning of the year. The beginning of the year was the low point. And right now we're at the high point in Apple. So the question becomes, will it keep going? So one of the things that I like to look at is RSI. And I've done some videos on this in the past, and so I think you're probably somewhat familiar with it. Well, I look at a couple of things in RSI. One is I look for the when it's in an overbought situation, for the line to cross down below the 70 line. And back last August, we certainly saw that. But then we've just really seen minor pullbacks since then, every time it's crossed back down below the 70 line. Sometimes even just 1 day pullback. So we're not really getting a whole bunch of information there. But now one thing that we are getting is we're getting a bit of what we call a divergence. So if we look here on this date, which is June 15th, the stock at that point made a high on the stock chart, and it also made a high here in RSI. And then as we go on a little further, we get to today, where it has made a high on the stock chart, but the high on the RSI chart is below this previous high. Let me just verify if this high or this high was higher. Let's see here. On this day, we had a high of 186.52. On this day, we had a high of, oh, well, this one was higher. So this was a bit of a divergence. This is a divergence relative to this peak here. So that could indicate a smidge of weakness, but you kind of can't fight the tape either. There's a lot of buyers. Now, one thing that was the case in not terribly distant past in Apple is we would have a volatility, sort of a true smile, or even having the calls bid more than the puts sometimes, but we don't really have that anymore. Let's jump ahead here to the 15 and 22 day expirations. We see the at-the-monies are trading at about 15, 16 volatility. Just for reference, the historical is at about 13. So that's actually a smidge high. But then the puts, we can look at the actual puts here. The puts have higher volatilities as the stock goes lower, but the calls, they have fairly steady volatilities as the stock goes higher, and only a tenth or a couple tenths different. We kind of go down, 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 and then up a little bit here. In distant past, because Apple was sort of a America's darling stock, and everyone really loved to buy it, and call buyers helped fuel some of the zealousness in Apple in the past, which wasn't overzealousness, it was just zealousness. We don't really see that here. We don't see the implied volatility of the call side being higher than the at the money. So, maybe that is an indication that this is just a pure rally based on, good solid numbers, good solid earnings, maybe a little bit about the glasses coming out. But it's going to be kind of hard to fight the tape. I wouldn't be surprised if we see somewhat of a pullback, just because runs like this do tend to need a bit of a rest. But it's really hard to call it massively overbought here, no matter what the PE ratio is. Hope that helps. This is Dan Passarelli, Trade Smart.